So the market, does anyone want to talk about the market? The Reno Sparks market, the Fernley market? Okay, we have a nod, yes. I see a lot of people going, yeah, what about the market? Does anyone have any comments about what's going on in Reno Sparks? So median price point is 530. New listings is down. Active inventory is low. Days to contract is actually increasing, which is an indicator that the market's slowing down a little bit. We're still getting, it's still a hot market, still a hot seller's market. It's not as hot as it was a few months back, but it's still pretty hot, and it's because of lack of inventory. Does anyone have any comments or questions about, I don't know if I have an answer, but appraisals are coming in. I'm seeing them come in low consistently now. So I wasn't experiencing that until recently. So a few agents were experiencing it a few weeks back, or about a month back. I think I'm just now seeing that happen. And I honestly, I don't know if it's a trend, if the appraisers are starting to get scared about what's going on with the market. I don't know. So, and sometimes it depends on the appraiser. So, and then if you have a VA loan for purchasing, if the appraisal comes in low, they exercise what they call Tidewater, which allows both buyer's agent and seller's agent to come in with their input for the appraisal value, for the comparables in the area, the upgrades, like you could submit a list of upgrades or what have you, to help them come up to the number that you see. So.
People that I'm talking to, I'm not really in the residential market. I talk to a lot of people, and they seem to feel that the market is flattening out. Are you finding that?
I'm seeing definite evidence of that. And so, yeah, okay, we are in the Reno market, Reno Sparks, same difference to me. So we are heading for what season?
Winter.
Winter. What happens normally in winter? It slows down. So, I mean, I'm seeing, yeah, okay, so things are slowing down. Inventory is still freaking low. And I do feel that winter we slow down anyway. So I don't know, is it because, what is it because of? I do know that buyers aren't feeling as desperate for some reason.
Is there any expectation that inventory will increase? Like there's tons of building going on. Is it just not enough to outpace the demand?
There's still not enough to outpace the demand. Last projection I heard, which was actually a little bit old, so it was a couple months back, a couple months is old to me, was that they weren't going to be at the level that they need to be until 2023. So we're still short on inventory through next year.
Okay.
So for the people that they have projected coming into the area, you know, and of course they base that on job growth and, you know, that kind of thing. And then we're also seeing people come in that maybe don't have work here, but they're able to live here for lower cost of living, and they're remotely working. So there's a lot of people. I have a lot of clients like that. So I can't speak for everyone, but I gotta imagine other agents out there have the same thing. Did you have something that you wanted to?
I was curious, like what historically for construction, what the time frame was, and then like currently with like materials being back ordered or delayed or on hold,
Yeah.
like how much longer has that put on, like time frame wise? I was just kind of curious. If you have a number for that.
Great question, and I think it depends on the builder, but also the supply and demand of things. So not just wood, like all the way down to like, so I've got a few clients that are renovating and they're having trouble finding plates for the light sockets. They're having trouble finding mirrors for the vanity mirrors for the bathrooms that they're renovating. They're having trouble getting just like those little things to finish things up. So I can imagine the builders are also having struggles, the same struggles. And so I've seen a 2-month increase on what used to be 6 months is now 8 months. What was 8 months is now 10 months with the new construction.
Yeah.
So, and I see that progressively getting worse because I don't see that problem with the little small things fixing itself right away.
Okay.
So I don't know, at least probably staying the same. Has anyone had that anyone renovating right now a property?
We had a friend that bought a house and got pushed back about 3 months.
Okay,
Like
bought a
month
new
by month.
construction,
Yeah, new construction, North County.
pushed out 3 months.
3 months, a month at a time. kept notifying, "Where
Did you want me to move?"
can't get that."
Yeah.
Still waiting on.
Rehabbers that are having issues finishing up the projects. Paint, same thing. So, you know, if you were using a certain color of paint and you plan to go over to Keller, was it Kelly Moore or Sherwin-Williams? Like I went to go get paint just for my little 9x11 office. And they're like, sorry, we're out of that color. Yep, we're out of that color. Like, okay, well, let's go with this. Let's go with my third choice. So for them to be out of colors is weird. I've never run across that before. Has anyone? Paint? Yeah, they're short on paint. So it's a weird market right now. So I don't know. Who knows what's gonna happen with the market?
So chlorine not available.
Really?
Tablets, some of the public pools not here. I've had to shut down because I can't get chlorine.
Wow.
I'm trying to paint a pool and trying to get special paint. Good luck.
Wow. You were gonna say something?
Yes, with regard to furniture, it's I don't know if you mentioned that already,
Not yet.
but part of the problem, as we understand it, is that the container ships coming across from primarily China and that particular area over there are slow to get over here. Also, there's a problem apparently on the West Coast with regard to unloading at the docks. The docks are just
Stacked up.
really inundated, and container ships and other ships as well are being anchored off the coast, waiting in order to get unloaded. And we're waiting for furniture.
Is it because of workers? There's not enough workers on the docks?
A composite of reasons, yeah, all of the above that I mentioned,
So,
plus workers, and I suspect probably because of the Delta variant, probably they just don't have enough people to process and deliver.
interesting. No, yeah,
Just two things. Speaking of containers, I've got a friend that ships stuff, boats. And stuff. And the container that used to cost them $2,500 is now $14,000.
Yeah.
And the problem with shipping is
Wow.
that the containers, they've got enough containers, I guess, but they're in the wrong place because it got stopped when COVID started. You know, everything kind of stopped wherever
Yeah.
it was. And so
Interesting.
which is probably some of the problems with loading and unloading. They stopped everything, and then everything that's hanging out there waiting for COVID, you know, came in, which backed up the stuff behind them
Right.
and behind them. And
How
so
about-
on.
How about car? Has anyone tried to buy a car recently?
I heard there's a shortage on the
Computer chips.
yeah, the semiconductors. So there's like a back order or back supply on those to make new vehicles. So yeah, you're paying a premium. for
You're paying a
vehicle now.
premium for cars right now. So it's kind of like the housing market. Don't buy a new car right now. Or even a used car. There's no used cars on the lots. It's the weirdest thing ever.
The chips are going to the most popular cars which have the greatest markup. And a lot of the cars are sitting, for example, a Camaro. We bought one in February,
Mhm.
and we were lucky to get it. But
And what kind of car was it?
a Camaro, Chevy Camaro.
okay.
Yeah, It was one that no one else wanted. Someone had ordered it with extra stuff on it, and they couldn't pay for it.
Oh,
And
gotcha.
so we swooped in and got it. But the rest of the Camaros are sitting on lots in Lansing, Michigan,
With
sitting
no-
there waiting
Waiting for their computer.
for
chips.
the computer chips.
Oh, interesting.
At one point, Ford rented out a stadium.
Oh, really? Wow. So crazy.
Honda makes their own chips though, so he doesn't want
Mhm.
Oh, nice.
And it's the one time that car salesman won't bother you.
Yeah.
You go, look, they won't hound you,
Yeah.
because they don't have enough cars.
So the
Yeah.
Subaru in town.
They're like, good luck.
They used to get, I think it was like somewhere between 90 and 120 vehicles every month, and they're down to about 36.
So crazy. We're in a weird market. I see you brought some articles here with you.
Can I talk about them later?
We can talk about them whenever you want.
Okay.
Yeah.
Or not at all.
Or not at all.
Whatever you want.
Some
You're in
interest-
charge.
interesting things have been happening, so
Yeah,
maybe
it's
we
an
ought to talk
interesting
about them
market.
later.
So I don't know what's gonna happen with the market. Are the prices gonna drop? They might. Right now, everyone's saying they're gonna kind of slut. And we do have a little bit of a market drop normally around this time. It's normal. So September is another like mini blip in our, I'm saying my whiteboard up here. So the market usually it goes up in March, typically without COVID. Goes up in March, stays up in April, starts decreasing in May, lowers in June, July, comes back up in August first, or no, comes back up in July a smidge. June goes down. June goes down, July goes up, August goes down, September goes up, and then it's down from there. So October, November, December, we'll have like a. So, and that's with the amount of sales, not necessarily price. So I think we still have a low inventory, so I don't know what's gonna happen with the prices, but we'll see. There's still multiple offers going on out there, so I don't know. In the right price point, does anyone know what the price point is? Anything below that is getting multiple offers. But anything above that could also get multiple offers if it's renovated. So that's good for you guys that are flipping properties.
What's the standard square footage house that price is going for now?
It's not square feet, it's area.
Like a
So
zip code?
square feet's gonna be relative to area. This is all about. So you can get the same, so let's say you find a $530,000 house in North Valleys.
Mhm.
You're probably gonna get less square feet if you find one in Devani Ranch. Galena Forest can be even less square feet. Does that make sense?
It does, okay. So it kind of depends on the area.
That's
Yeah.
a shed of a Tahoe.
It's a shed. Yeah, it's someone's she shed in their backyard in Tahoe.
So easy.
Exactly.
And if it's on the water, it's a garage door.
I love that. Okay. So we are lucky enough today to have someone, an expert in the area of 1031 exchange. And I don't, how many of you guys have done a 1031 exchange with your money? Okay. How many of you guys have investment properties at some point you might want to sell? And okay, perfect. And maybe not have a tax consequence. So I'm sure that you're going to share with us the basics of what a 1031 exchange is, and then kind of, progressively, depending on experience level in the room, how deep you go. So there's some people that have experience, some people that are going to have experience maybe in the near future, I don't know. And so I'm going to have you come on up. So let's
Thank
give
you
her a-
very much.
Nice introduction. I'm gonna set my water right here.
Sure, no problem.
My name is Erica Rutherford. Let's go back, just make sure this is working. I am with First American Exchange, and all we do is 1031 exchanges. You may have heard of First American Title. We're a division of First American Title. I just give you a little background on me. I've been in real estate probably 20 years. I was talking to the gentleman back here before everyone came in, and I do flips. I was kind of slowed down last year. But when I went to sell my first investment property back in the early 2000s, I got my tax bill and I said, well, wait a minute. What is this? Where did this come from? So at that point, I was trying to find a way to make my tax liability go down. So I found out about 1031 exchanges. I was young at that time. I was getting my taxes done at H&R Block. I went in there and they were like, well, what are you talking about? We have no idea what that is, you know? So I just want to say, and if you're, for all investors, include myself, I think a good part of your team is a great CPA. So if you have a good CPA, they're worth their weight in gold, just like a great real estate agent. So you should always have those in your team. But I'm going to talk about the basics of 1031 exchange. We will talk about the qualifications of 1031 exchange. We'll talk a little bit about reverse exchanges because that can be a class all in of itself. And we will, at the end, I'll touch a little bit of basis about what's happening with the current administration and 1031 exchanges because they're trying to take it away. We're always put on the chopping block with every administration. They're always trying to get rid of us. So what exactly is a 1031 exchange? So a 1031 exchange is tax deferral. It's not a tax exclusion. It's a tax deferral on the sale of property used in a trade or business or held for investment when you exchange it for property that is like kind to be used in a trade or business or held for investment. There's different type of 1031 exchanges. So the original 1031 exchange was a swap. So a swap, they just trade properties. And some people, we get probably 2 or 3 of those a year. The original exchange was done by a gentleman, his last name was Starker. So you may have heard of 1031s, it's referred to as Starker exchanges as well. So they just swapped property and that's it. You don't need a qualified intermediary. This person wants to sell their property. This person wants to sell their property. They like the property, swap them, done. If you want to do a delayed exchange, which means you sell first and then you purchase second, you have to have a qualified intermediary. So First American Exchange is a qualified intermediary. There's also reverse exchanges where you purchase first, sell second. There's an improvement exchange. So a lot of times our commercial investors, or if you have a doctor who is selling his practice or his office building and he can't find anything to replace it because there's nothing out there that can suit his needs. So he can build what he needs by doing an improvement exchange. And then there's also a reverse improvement exchange, which means you buy first and you're going to do improvements on that purchase. What are the requirements of a 1031 exchange? So in order to do a successful 1031 exchange, you have to acquire like-kind property that is held for investment or productive use in a trade or business, identify replacement property within 45 days of closing of the relinquished property, reinvest all cash and acquire replacement property or properties, because you can buy multiple properties, of equal value or greater within 180 days from the first closing of your relinquished property. And you want to make sure that the same taxpayer in an exchange that sells also purchases the replacement property. And you can use a qualified intermediary to meet the safe harbor. So what is the safe harbor? The IRS says in a lot of their rules, one of the other safe harbors is a home office. I'm sure all the real estate agents or even some of your investors may have home offices. So instead of putting in all of your expenses and all of those things with your home office, your utilities, your mortgage or your insurance payments, you can do a safe harbor method, which is they'll give you $5 per square foot of your home office. And when they say it's a safe harbor method, they pretty much mean that they won't audit you. Or if you get, there's less chance of you being audited if you follow these rules or if you go by this list that they've established. And in 1031 exchange, the IRS has said, if you use a qualified intermediary and you follow these rules, there's less chance of you being audited. So what are the qualifications for an exchange? The property you're selling and the property you're purchasing must be held for investment or productive use in a business or trade. It has to be exchanged for like-kind property. What are non-qualifying properties? So a primary residence, I swear, I get this call at least 5 times a week from agents. My client's selling their personal residence and they want to do a 1031 exchange. And I'm saying, no, that's not gonna happen. Are they renting it out now? No, they're living in it. They've been living in it for 10 years. That doesn't work. There's a 121 exclusion that allows people, your personal residence, you can exclude $250,000 worth of gain if you're single and $500,000 worth of gain if you're married, filing jointly. So that doesn't qualify. Cash, stocks, bonds, or notes don't qualify for 1031 exchange. Interest in a partnership or an LLC, get that call 3 times a week. Me and my buddies are gonna buy a property together. We formed an LLC. Doesn't work. Cannot buy membership interest in a 1031 exchange. You must be receiving real property as your replacement property. Flips. IRS doesn't like people who do flips. If you're doing flips, can't do a 1031 exchange. And also foreign property. So if you're selling in the United States and you want to buy something, let's say in the Bahamas, that doesn't work. But if you're selling in the Bahamas and you want to buy in the Bahamas, then you can do a 1031 exchange. So as long as it's offshore to offshore, but you can't, you know, if you're selling in the US, you have to buy property that's in the US and you can buy, yes.
On the flips, what's the shortest amount of time you can have someone stay in a property as a renter and they consider it a rental? And then turn around and say, hey, I'm not flipping it, I had a rental.
That's a gray area. I like to tell people, I tell my investors, they say, well, hey, I said, well, some CPAs will say, run it through at least one tax cycle, right? So if it shows up on one tax cycle as an investment property, then it's an investment property. More conservative CPAs will say 2 years. But you know, really, what are you supposed to do? You put a house up for rent, somebody walks in and says, I want to pay this amount of money for the house. We're in business to sell houses, right? You know, you want to flip your house. You may have to have the intention of renting it, but if somebody comes in and offers you a price you can't refuse, that's where a good CPA comes in. Because if you get audited, they are going to be the person to have to defend you in that audit. And the IRS is going to look at intent. What was your intent when this started? Yes, Ginger.
Someone online wants to know, it says, is 45 days a hard requirement, or are there extensions or exceptions that can be filed?
There are no extensions in the 1031 exchange. So if you're 180 day, and we'll talk about this a few slides down, if your 180th day or your 45th day falls on a Sunday, oh well. Falls on Christmas,
You have to get a contract or agreement at the 180th day? Or-
at the 180th day, your exchange has to be done.
Oh, wow.
Everything has to be purchased, yeah, everything, you have to purchase all your replacement properties, everything, that's it. Yes,
Along those same lines as this question about the flips, would it be the same if you had a primary residence, you purchase a new primary, you move into it? Would those same rules follow as far as the tax cycle and establishing it as a rental property to put it into a 1030?
well, if it's your primary residence, you get an exclusion. I understand a 1031 exchange is a deferral of taxes. But if it's your primary residence, you get excluded. The taxes just go away. And you just have to live in your primary residence 2 out of 5 years in order to qualify for the 121 exclusion. So what is like kind in a 1031 exchange? Most people think if you sell a single family home, then you have to buy a single family home. If you sell a 4-unit apartment building, you have to buy a 4-unit apartment building. But that's not true. Anything that is real property qualifies for 1031 exchange. We have clients that go from land to commercial. They sell commercial, say I'm gonna sell my commercial office building, buy 10 residential, single family residential homes. It all works. As long as it's defined as real property, it qualifies for 1031 exchange. Now I have some of my clients who buy mobile homes. So those can be a little tricky because depending on what state you're in or how they're submitted to the ground or whatever the state qualifications are, if they're able to be moved around, they're considered personal property. So mobile homes can be a little tricky. The land is exchangeable, but sometimes the mobile homes on them can be defined as real property.
You're talking about an individual mobile home, would a mobile home park
Yeah, mobile home park, yeah,
Okay.
both, yeah, so sometimes, so I had a client a couple of months ago who bought a mobile home park, but all the mobile homes were able to be moved, they were just renting the land and people were coming in, plugging in up to things. So the homes that were on that land didn't qualify, but the land itself she could exchange into. So she paid maybe 1.3, I think, and in the contract, it has to be separated out when it's personal property. So all real property qualifies for 1031 exchange. Back to the question we got online, what are the timeframes for an exchange? So closing of your relinquished property is day 0. So if you sold your relinquished property today, tomorrow would be day 1. So the day after closing actually starts the clock ticking for the 1031 exchange. At day 45, you have to identify your replacement property. And what do we mean by identify your replacement property? Everybody, I get these calls too. Well, you can be identified with a contract too, once you have a contract and it's signed, and if it has 1031 language in there. But some people send me emails and they say, okay, I've identified, here's my address, this is everything. So when we mean identify, it can be in a contract, it could be with your escrow person, anyone who's privy to the deal. Your real estate agent can be someone you identify to, but for our purposes, we give you a form, and the IRS rules say that the property must be unambiguously identified. So you write down the address, legal description, parcel number, signed, dated. We put that in your file. Hi, welcome. We put that in your file, and that's how you identify. It's pretty simple. Now, once you identify, after the 45th day, on the 46th day of that exchange, whatever's on that paper is all we can help you buy. From day 1 to day 45, you can revise, change, revoke your previous identifications, but on day 46, whatever is on that form, that's it. So from day 45 to day 80, yes.
So hypothetically, like, you mentioned like the mobile home park.
Yes.
So like, if you were buying a section of it, but you put down the whole address, and then within that window, you negotiate like I'm only buying a fraction of it, but I've identified the property as a whole. Is that kind of
That
a
could
gray
be a
area?
little, yeah, that could be a little
Okay.
shaky. So we always are reviewing identification forms for that purpose.
Okay, okay.
Saying, hey, this isn't, you need to narrow this down a little bit. Are you gonna buy this? Are you gonna buy that? But sometimes we get duplexes, they can be sold separately, then they have to be identified separately. Yes, sir.
You're gonna get into how many properties you can identify.
Yeah, we're gonna get into that, sure.
Okay.
Yeah, but you can, the rules for identification. Yes,
Would it be better to reverse? In the
we'll
sense
get
that-
into that too.
'Cause it just seems
Reverse
like
is a
this
little
is a
bit more
lot-
complicated.
Is it more complicated, but it seems like.
Yeah, it's a
more-
little bit more complicated. So 180 days, you must close on your replacement property by that time. Now we're getting to the time, the end of the year gets a little interesting for us because you have 180 days to do your exchange. But most people's taxes are due April 15th, or that's when they do their taxes. So when we get closer to tax time, the date changes. So it is 180 days from the relinquished property closing or the due date of filing federal income tax return with any extensions. So if you start an exchange in January and your taxes are due in April, shouldn't you get the same amount of time as everybody else? So you can file an extension at that time and then be able to complete your exchange within the 6 months. Again, no extensions. If it's the deadlines on a Saturday, Sunday, legal holiday, that's it. Nothing short of a presidentially declared disaster will give you an extension on the exchange. And even last year with the pandemic going on, I think they only gave the exchangers 30 days. So if you were in the middle of trying to identify your replacement property, they gave you 30 days and that was it. Here's the identification requirements. So in addition to what I said previously about the form and being unambiguously identified, they have rules for how you can identify. So 90% of our clients use the 3-property rule. In the 3-property rule, you can identify up to 3 properties without any reference to value. Doesn't care. So you can put a $20 million property on there, $5 million property. Now, if you need to identify more than 3, the rules change a little bit. That is the 200% rule. So with the 200% rule, you can identify as many properties as you would like. However, their combined value cannot exceed 200% of what you sold. So if you sold a property for $2 million, then you can identify as many properties as you would like, as long as their combined value doesn't exceed $4 million. So you could buy 10 properties at $400,000 each. You could buy 3 properties, 1.5 million, or however you want to do it. But the combined value of all the properties identified can't exceed 200% of what you sold. Yes.
So it's based on the sale price and not on like the gain that you're trying to.
It's based on the sales price. Yeah. The 95% rule, I've been doing this almost 10 years. I've seen 2 people try to do it and only 1 succeed. So the 95% rule means you can identify as many properties as you would like without any reference to value. However, you have to purchase 95% of what you list, which is basically everything. So if you put down 10 properties and for some reason you can't purchase one of those properties, your entire exchange is invalid. So that's why a lot of people don't use that rule. And if you purchase a property within the first 45 days, it's automatically identified. I mean, you bought it, right? So let's talk a little bit about taxes. Everything we're trying to defer with doing a 1031 exchange. So short-term taxes, capital gains taxes, and long-term capital gains taxes. Short-term, which means you've held the investment property for less than a year. It's taxed at ordinary income. If you hold investment property for at least a year and a day, it's taxed a little bit differently. For incomes below $445,850 for an individual and $501,600 for married for 2021, these change with inflation. If your income is below those numbers, your gain tax will be 15%. If your income is higher than those numbers, then your capital gains tax will be 20%. In any case, you're going to have a 25% tax on your depreciation. So if you've been holding an investment property as a rental and claiming it on your taxes, for residential, it's 27.5 years, flat straight line depreciation. And you've been depreciating it for 2-3 years, you're going to have to recapture that depreciation at 25% when you go to sell. Same thing on the 20% gain. And we'll do at the end of the slides, I'll have a scenario where Bob and Sue sell something. Also, there's a 3.8% net investment income tax. This is tax on unearned income, which includes gain from the sale of real estate. So any gain on unearned income is also taxed at 3.8%. And this is applicable to individuals with an adjusted gross income over 200,000 and married couples with an AGI over 250,000. So let's look at a scenario, a typical sale versus an exchange. So we have a married couple, they're filing jointly, and they sell an investment property in California for $1 million. This is their net after closing costs, and there's no debt on the property. They purchased this property for $400,000 10 years ago. $300,000, so there's a building, sits on land. Land is not depreciable, right? So the building is worth $300,000. They fully depreciated that. So 75% of the 75% or 300% of the initial purchase price was allocated to the building and has been fully depreciated. The capital gain is approximately $900,000. Today's, the sales price of $1 million minus the net adjusted basis. Because they've depreciated here, their basis has reduced down to $100,000 because they fully depreciated the building. Their modified adjusted gross income is $1.4 million. And this includes capital gains from the sale. So let's look at the taxes they would have to pay on this sale if they didn't do a 1031 exchange. There's a sales price, so they're going to pay 25% on the 300%, $300,000 to recapture the depreciation that they fully depreciated the building out. They're going to pay $600,000 federal capital gain at 20% because that's their gain, right? They had it for $400,000, they're selling it for $1 million. They're going to pay $900,000 net investment income tax at 3.8%. And then if they're in California, they're going to pay a state tax of 3.3%. So this will be the total taxes owed if they don't do a 1031 exchange. Now, if they do a 1031 exchange, their 1031 exchange gross equity is $1 million, because guess what? All of those taxes on the previous page are going to get deferred. So now you have $1 million to put into your replacement property or buy multiple replacement properties because you haven't had to spend all this money on taxes, right? The net equity is $651,000. So what do you need to do in a 1031 exchange when you buy? So in order to receive full tax deferral in a 1031 exchange, you have to buy of equal or greater value than what you sold. So if you sell for $2 million, you have to buy for at least $2 million. In equity, the equity has to be equal or greater. And the debt, so if you're paying off a loan on your relinquished property, the property that you're selling, so if you're selling for $2 million and you're paying off a loan for $500,000, in your replacement property, you have to replace that debt as well. So anything short of those things, or you can do it with cash out of pocket. So you don't have to get a new loan. You can put cash out of pocket and say, here's the $500,000 to replace the debt. But anything short of that, you're going to be taxed. And it's called boot in an exchange. So when things don't add up, or something is less, or you don't fully accomplish all of these things, you have what's called boot in a 1031 exchange. And when you hear the word boot, that means that something is going to be taxed. That's the word for taxes in a 1031. So here's an example. Our relinquished property that we sold has a value of $2 million. The replacement property is $2.5 million. We had debt of $1 million on the relinquished property. We replaced the debt of $1 million with debt of $1.5 million in the replacement property, and the equity remained the same. So all of these things are equal or greater than value, and that equals no boot. If any of these things were less, you can always go more, but if any of these things were less, then you would have boot, which causes a taxable event. Does that make sense? You all look like you're here. So in an exchange, technically, when you're doing a 1031 exchange, it's the sales price minus allowable exchange expenses. So what are some allowable exchange expenses? Broker's commissions. So always have a real estate agent when you're selling your property, because that's an allowable exchange expense. Appraisal fees required by the contract. Our fee is an allowable exchange expense. Transfer taxes, escrow and recording fees, title insurance fees for the owner's policy, and any attorney's fees incurred in the transaction. These are all allowable exchange expenses. So let's just say you were selling for $2 million. That's my favorite number. And your exchange expenses or all of these expenses, your settlement costs came up to $100,000. So even though you paid all of these expenses, the net you would have to spend is 1.9, and you would still defer taxes of $2 million because these are allowable expenses. Now, as investors, there are some things we see on the settlement statement all the time that are not allowable exchange expenses. So some things that are not allowable exchange expenses are loan costs and fees, title insurance fees for the lender's title insurance policy, appraisals, and environmental investigation costs that are required by the lender. When you're doing commercial property, usually they want an environmental study done on or what's called a phase 1. That is not an allowable expense for a 1031 exchange. Yes.
Is it allowable if it's in the contract?
It could be. Yeah, that's kind of a gray area. But yes, it could be if it's in the contract or if it's, yeah, as long as it's the lender things, anything associated with the lender generally is not going to be an allowable expense. These we see all the time on investors when they're selling on our settlement statements when we're reviewing them, security deposits. The seller, the investor who's a seller is giving the buyer a credit of security deposits on the settlement statement. But you really are supposed to have those things in a bank account somewhere sitting to give them back to your tenants, you know, if they meet all the requirements of their lease. If we see them on the settlement statement, we will bring them to your attention along with the prorated rents and say, hey, pay these outside of closing, because if they stay on the settlement statement, they are going to cause boot, right? Yes.
With the boot, does that mean whatever portion is taxed, or does that trigger a whole taxable on the whole?
No, just a portion. So if these remain on the security, if the security deposits or prorated rents stay on the settlement statement, and let's just say there's $30,000-$40,000, only that portion will be taxable. So you can do a partial exchange as well, because we have, you know, some people who sell something for $5 million and then they don't mind paying taxes on $3 million. You know, they just don't want to pay taxes on the whole $5 million. So you can have a partial exchange and it still be successful. Insurance premiums and property taxes also do not qualify as 1031 exchange expenses. So let's talk a little bit about vesting. I'm sure you've heard when you do a 1031 exchange, they always say, hey, same taxpayer that sells must also buy. So if you sell the relinquished property as a partnership, pretty much the partnership has to do the 1031 exchange as well. To put it kind of simple, the sale of the relinquished property and the purchase of the replacement property both have to end up on the same tax return. Does that make sense? So if the partnership, we do have sometimes partners who don't want to do exchanges, so they do what's called a drop and swap. So prior to the 1031 exchange, they will drop title out of the partnership of the property that they all own together to tenants in common. And each person will have their own undivided interest. And Bob, Bill, and Mike wants to do an exchange. Bob and Bill don't want to do it. So Mike can take his portion, do the exchange. Bob and Bill can walk away with their portion too as well. Those can be a little bit complicated depending on how far in advance of the exchange that you do them, because the IRS doesn't like partnerships doing drop and swaps either. And California, believe it or not, has said, the franchise board has said they're going to audit almost all the drop and swaps in California, because I guess people are doing a ton of them. If a corporation sells, the corporation must purchase. If it's a revocable trust, now it gets a little different. See, because Rick and Sue as individuals can buy. Why do you think that is?
They are the trust in the trust.
Correct. And the trust, for some people, they report that on their personal tax return. So the trust doesn't file its own tax return. It's a pass-through entity for their tax return. So if this is a pass-through entity for Rick and Sue's tax return, then this will be on the same tax return as that, even if they buy the replacement property in their own names. Both transactions are going to end up on Rick and Sue's tax return. Mary Jones, as an individual, she sells. She can purchase a replacement property as a sole member of an LLC, because that LLC is disregarded for tax purposes if it only has one member. Everybody's looking. Any questions about that? Does it make sense? Yes.
So, let's say you hire somebody else, would there eventually, let's say, a promotion, something that just puts up like very basic things. Would that be a sole member at that point, or would that be?
When they say a sole member of an LLC, it means that the LLC that's been filed with the state only has one member. That's it. Can't be anybody else. The minute it has another member that is not your spouse, the IRS taxes it as a partnership, unless you make an election to be taxed as something differently. So now, if she has another member, like her friend says, come on in, I'm going to be this, let's do this Jones LLC together. The minute her friend becomes a member of that LLC, that's a different tax return. Because the partnership's taxes is a pass-through entity and they get a K-1 at the end of the year. So now Mary's relinquished property has been sold. That would go on her personal tax return. Yes.
Sorry, I wanted you to finish your thought. Sorry. Yeah, go ahead.
Mary's relinquished property would be on her personal tax return. But if she had another member of this LLC, that's an entirely different tax return, because now it's going to be a 1065, if that makes sense. Go ahead, Ginger.
Can someone that's on Zoom unmute and ask you a question?
Yeah, sure.
Hi, can you hear me?
Yes, yes.
Hi, my name is Dalton. So I'm sure I'm like many people in this room right now where this part's a little confusing. I am curious. So I'm not specifically investing in like single family homes. I'm more so doing like a syndication where I'm investing in multifamily apartments. And
Hey, here, you say that one more time.
So I'm involved in multifamily syndication. So like multiple people investing into like an apartment building.
Okay.
So I'm curious, would each member need to file for the same property after for a 1031, or do what we do like the dropper swap, or is it different when the asset is owned by a limited partnership? Or
yeah,
LLC?
so whoever owns it, however that property holds title in the relinquished property is going to dictate how the replacement property is purchased. So is a syndication similar to a REIT or?
I'm not completely sure.
Like a real estate investment trust or something, or?
Yeah, so like the asset, like the property itself is owned by an entity like an LLC or a limited partnership. So then like that name, the property itself is owned by that entity and no individual name.
That's fine. Then that entity would have to do the exchange, whatever that entity is. Or if it's a limited partnership, there might be a drop and swap possibility there.
Okay, cool. Yeah. Thank you.
You're welcome. So title to the new property must be vested in the same name as the old property. Disregarded entities, what we just touched on a few minutes ago, are allowed if owned by the same taxpayer. Single member limited liability companies or revocable trusts, because most revocable trusts, the trustees report that their actions on their personal tax returns. Yes.
Back one slide.
Sure.
On the last.
Oh, I missed this one. Thank you so much. So this is John Smith is 100% ownership. So now John Smith can buy a 20% tick interest in another property. tenants in common. So John, how we said these partners, so let's say Mary, Rick, Sue, and John all want to get together and buy a property. They cannot open an LLC and all be members of the LLC and then purchase that property if they're all doing an exchange, because now that changes the tax, the vesting and the tax entity for the relinquish. But what they can do is they all can buy an undivided interest in the property as tenants in common. So that's a way to hold title. So as a tenant in common, John's gonna receive 20% ownership in that property that he can sell, get rid of whenever he wants to, because everybody owns their own undivided interest. So that's just a different way to hold title when you're buying property. And for 1031 exchange properties, if you want to go in with multiple people, tenants in common is the best way to do it. Yes.
How long is the LLC, sorry, going back to this one, of the LLC, how long does the LLC have to be created for?
We have people create LLCs in the middle of exchanges.
Oh, really?
Yeah, so they'll sell as Mary Jones, and then she says, oh, you know, I'm buying in an area, I wanna, it's really a limited liability company does exactly that. It protects your liability. So most investors, you know, who own real estate, if something happens on that property with your renter in it, you want to protect your personal assets. So a limited liability company for the most part does that. So Mary can say, oh, well, I'm going to buy, she may have sold land, but now she's buying a single family residential. So she wants to, she says, oh, well, I'm going to do an LLC to protect my personal interests. Limit her liability.
So would it be possible if you've got two individual owners that own as joint tenants, and then I guess sell and purchase another property, both like the same ownership would apply on both ends?
Correct, yeah.
Could you go from vacant land to a single family home?
Mhm,
on-
yeah.
Okay.
Yeah. You can do vacant land to a single family home.
Could you do vacant land to a single family home and convert if both owners went into a partnership LLC? If it was the same owners?
It depends, because joint tenants is usually what husband and wife hold title as. So if one dies, right, and then, right, Ginger, is it joint tenancy? Yeah. If one dies, then they, you know,
The
other person gets it. So as husband and wife, they can set up an LLC and go into the replacement property as an LLC. And because the LLC is gonna be, because they're the only two members, it could qualify because it's gonna be still on their same tax return because it's gonna be disregarded. Or the IRS has a rule for husband and wife partnerships that they allow you, you don't have to actually form the partnership. They'll let you report all of the activity of that partnership on your personal tax return. So that'll still qualify.
Does that change things if you're not married?
It does.
That's my-
It does, so it has to be your spouse. Yeah,
Okay.
it does. Okay, and we've covered that. So what is a did you have a question?
Yeah, everything on the right-hand side, if that was on the left-hand side, would it still work?
Let's go back. Yep, so Rick and Sue Wilson as individuals could buy on their trust. Yep. Mary Jones, if she's a sole member of the LLC and she sold that way, she could buy as Mary Jones. Yep. And he could have a 20% tick in something, tenants in common interest. And then the next property be only him. Yes, it will work. So what is a qualified intermediary? First American Exchange is what you call a qualified intermediary. As I said earlier, if you're doing a delayed exchange and you wanna make sure that the IRS and it's a safe harbor, you really should have a qualified intermediary. Our role is generally respected by the IRS, but the use of the QI doesn't necessarily bless the result of an exchange. So if you don't follow the rules, and even if you have a QI, your exchange could still be invalid. Another question I get a lot is, why do you have to hold my money? Why can't my attorney hold my money? Why can't I give my money to Ginger, my real estate agent? Let her hold it. The problem with that is that all of these people you see listed here are disqualified persons for being your qualified intermediary. I get a lot of people, especially when we have $30 million, $50 million, they're like, you know, what are you gonna do when we get those deals? They are really, yeah, I want my accountant to hold it, or why can't I open a bank account and let my attorney be my exchanger? Because anyone who has been your agent in any capacity, I think for the last 2 years, disqualifies them as being your qualified intermediary. So even though you want to give your money to Ginger, she can't do it. You gotta call me. You gotta call me. So when it comes to selecting a qualified intermediary, believe it or not, our industry is not regulated at the federal level. So there's nobody who's checking up on QIs. If you go on Google and type in qualified intermediary or tax 1031 exchange, you will find a lot of businesses who say they're qualified intermediaries and do 1031 exchanges. A lot of mom and pop shops shut down, went to bankruptcy, so you really got to be careful about who you choose. Now, the state of Nevada and some other states do have regulations in place. I think the state of Nevada, you need $1 million bond on file with the state in order to be a 1031 exchange company. They have some other rules as far as how your money is dispersed, what happens when it gets dispersed, when it's received. So you want to look for a good track record. Our industry that's similar to the Realtor Association is Federation of Exchange Accommodators. So if you go to their site, you can find a list of qualified intermediaries that are members of this organization. And just like the Realtors Association, there's a code of ethics that they vow to stick to. So just be careful when you're selecting a qualified intermediary. First American Exchange is part of First American Title, who's been in business for over 125 years. So your exchange funds are guaranteed. If we have 700 exchanges going on, we got 700 bank accounts open. No commingling of funds. All of our exchangers have their own separate bank account, and interest rates are pretty bad, but we do pay interest. You might be able to buy a cup of coffee but when we give you your interest, because they're so low right now. We have a fidelity bond, errors and omissions insurance. You have my expertise. And we have a really good reputation. We've been doing 1031 exchanges since the IRS allowed, I think back in the late 80s or so. And we are a full service exchange company. We do reverse and improvement exchanges as well, as I said earlier. So now here's the fun part. What is a reverse exchange and how does that go? I'm going to touch on this a little bit because this is a class all in of itself. So maybe I'll come back and teach that one next, a reverse exchange. So a reverse exchange allows you to buy first. In a delayed exchange, you sell first, buy second. A reverse exchange allows you to buy first and then sell later. Same time requirements still apply. So it still has to be completed within 180 days. But the IRS says that the taxpayer cannot hold title to both properties while doing an exchange. So what happens is Joe calls me up and says, hey, my relinquish is just sitting there, but I found this other property I have an opportunity to buy and I don't want to lose it. So I say, okay, we will acquire that property for our taxpayer. We will hold it in an LLC. We'll create an LLC. We'll buy it. Reverse exchanges work best with cash deals. So they're mostly commercial people that call us and say, hey, we want to do them because they've got the money to put down. We do have some people that do them residential, but mostly they're commercial. And they say, okay, because lenders don't like to see us on title. So if you got to get a loan, it happens sometimes, they'll let us be on title. But for the most part, reverse exchanges work best with cash deals. So we'll purchase the property in an LLC that we've created. We'll hold it until your relinquished property sells. Once that happens, we have and we'll give you a lease so that you have full access to the property while we're waiting. So you can do whatever you need to do. If there's some improvements you want to do, while we're waiting for your relinquish to sell, you can do all of that. We have a promissory note that we hold when we purchase the reverse. And then when your relinquish sells, you pay off that promissory note to us with the sale from the relinquish. So everything's just happening in reverse. And then we transfer the deed of that property back to you. But everything's the same. So 45 days, instead of identifying a replacement property, you're going to identify your relinquished property. You still have 180 days to close, no exceptions. Your relinquished property has to close within the 180 days, be sold, or you have a failed exchange. So sometimes you hear qualified intermediary, which is what I use a lot. But our attorneys who do our reverse exchanges and our improvement exchanges, they're called EATs. So same thing for the most part. So an EAT is an entity accommodation title holder who holds the property, acquires the property in the LLC for you. So qualified intermediary. In the residential, that's what you hear. In commercial, you hear mostly EAT, but pretty much they're the same thing. Yep, 180 days. Anything I miss here in a special single member LLC? Yep. So that's a little bit of a reverse exchange, yes.
You want to mention the difference in cost?
Oh, yes.
Yes.
Right.
So a qualified, residential forward exchange that we've been talking about, under $1 million, our fee is $895. And that'll cover your sale and one replacement. Our reverse exchanges start at $12,000. Just because of the, and they can't go up from there depending on.
You just go ahead and skip through this.
Depending on how, complicated they can get. So yeah, that's the biggest difference. So the current climate for the 1031 exchanges right now. So I'm sure everybody's heard about Biden's current proposal. And the proposal is to end 1031 gains, 1031 for gains greater than $500,000. Or $1 million if you're married filing jointly. So basically everyone gets $500,000 for their gain. So if you were selling something for $1 million and you're single, you would only be able to defer gain on half that. Yeah, it has not passed through yet. And it wouldn't be effective until next year. So if you started an exchange next year, that's when it would go. We were having a little powwow about it before everyone got here. And currently in our last call, I think it's at the Senate right now, it might be at the Senate or it's in the House. They were marking everything up because they do all these markups before they vote on it. And at that time, exchange was not on it, but that could change. But at the time we had our call, the markup they had left, they were going to leave 1031 exchange alone. So we're hoping and praying that it stays that way because I would be out of a job. And this is like my dream job. I love my job. I love coming in, talking to people. I love to see when the green light goes off and you finally get it, when I'm teaching classes, but that's where we're at right now. So hopefully we've got our lobbyists working on everything. My boss, Julie Baird, she's the CEO of First American Exchange. She was actually on a Zoom call with some of the senators and Congress because they don't understand it. They're like, what is a 1031 exchange? They're just like, oh, if they say it should go, then let's get rid of it. So information is power. So we're just trying to educate these people so they understand the process and what a good thing 1031 exchanges are in general, especially for investors and for the economy. Because it makes you buy something of equal and greater value. You're putting money back into the economy. It creates jobs. So, all right. That's my little spiel. You got any questions? Sure.
Just in the last slide, I know there was some sort of discussion on provision regarding the step-up basis. Do you know if that was also eliminated?
I don't think so. So yeah, they were trying to get rid of the stepped-up basis. As far as I know right now, in our last call last week is still good. Because the great thing about a 1031 exchange, in case you don't know, is that you can keep exchanging until your death. So exchange after exchange after exchange. And then your heirs can inherit the property at a stepped up basis. So your basis may have been $100,000. And now 20 years later, it's worth $1 million. That is gonna be your heirs basis. So now all the capital gains tax that was due completely goes away.
Not in California, right?
Maybe not California, right?
But that's what just changed last year.
Did it in California?
Yeah, so you had until April 15th to get rid of your property or give it away
Mhm.
at the old tax bases. Now,
Wow.
California, and it helps firefighters, it helps all these
Right.
people, money for teachers and
Right, right.
the cities, but it's just gonna kill families where they can't afford it, they can't afford the taxes. on
Right,
homes.
right, right.
And-
Yes, ma'am.
Oh, I think are you talking about county or state property taxes? Because the California can't change the internal revenue code. So are you talking about property taxes and?
It was,
stuff like
yeah, so when if you were to inherit your house, it's on the new taxes now, not the old.
That's for property
Yeah.
taxes, but what we're.
Oh, okay.
Oh,
The
okay.
basis is federal. income tax.
Yeah, federal income tax.
But
Yeah.
California has their own state income tax.
Yeah, they can.
Regardless
They have
of
their
what
own
federal
state.
State
does.
income,
Sure.
Yeah.
It's not gonna affect your federal.
No. Yeah, federal tax would be the same. Yes, sir.
I believe with the new House bill that they proposed within the last few days, a step up in basis was actually eliminated.
Oh,
recently.
good.
Yeah,
Yeah.
and then also that is Prop 19, where if you inherit a property, it gets reassessed, and based on the state or county taxes, you will pay quite a bit more in your property taxes.
Oh,
But that's
okay.
not.
Yeah, no wonder all the Californians are coming to Nevada.
Oh, yeah.
It is ridiculous. Oh, my goodness. Did you have another question?
Yeah, when you had all those arrows on the exchange,
Mhm.
let's say you had a family member that's like a grandmother that had Alzheimer's, and all of a sudden they wanted to not pay the taxes, but kind of hand it off to family members, but before she died. Is there a way to add somebody to the deed or the loan in that sense of power of attorney without having to? I'm
Yeah, but she's still gonna, her estate is still gonna qualify for the 121 exclusion if she's been living it.
Gotcha. But a lot of the paperwork, I was just wondering.
Yeah.
the Paperwork, because they don't know what they're signing and all that.
Yeah,
stuff, so
yeah,
you
yeah.
can
Yeah,
cover
but
it.
you can, yeah, or putting into a trust, or somebody can be made power of attorney over her estate or something
Yeah.
like that, yeah. Absolutely. All right, yes, no worries.
So this would be great for, let's say, a first time investor that would be looking to essentially do the burmester rate by. Would that be a great thing to continue on to keep doing after your first time investing?
Is it 1031 exchange? Sure, yeah, if you want to keep, I was on a call, I saw a Zoom video that my boss was in, and they were saying that they did the analysis for the House or for Congress. Someone who did exchanges for 30 years and someone who didn't do any exchanges, just held on to the same property. It was like I want to say maybe a $3 million difference between the two. The guy that had done exchanges paid all these service fees, like for escrow, real estate agents, for people like me, throughout his process of exchanging. This guy just held onto his property and paid the property taxes. So it does put money back into the economy, and it makes sense to keep exchanging, because you don't have to pay any taxes too, as long as you're constantly exchanging. So it does. It really does help out. Did you have a question?
Yeah, would there be any issues, say you complete a 1031 exchange in 2021?
Mhm.
It's all completed, it's all done, you do your taxes at April 15th, 2022. And on April 25th, 2022, you do a quitclaim deed and retitle that. So maybe you go from individual to individual. Late April of 2022, you do a quitclaim deed and put it into an LLC. Is that gonna have, is there any?
Once your exchange is over, for the most part, talk to your tax person. But for the most part, you should be good. And also when you're doing equity too. So like if you buy something and you may want to pull out some equity once you bought it, because you got to spend all your money, right? And when you buy the replacement property, you can be a little cash for if you need to do some improvements or something. Talk to your CPA, but that's also allowable. I'm telling you, your CPA, when you're investing, is worth their weight in gold, like your real estate agent. Simply because you don't have to worry about it. Let them do all the research and look everything up in the tax law, and because it's a gray area, even within 1031 exchange. Taxes in general, I always tell people, I would not want the law in general is up for interpretation, right? Do you want someone that does injury law defending you in a murder case? Not me. You know, so if you have a good CPA that's willing to do the research and for your particular situation, it's really, really a good thing. Then, you know, you can rest at peace.
You end up in a lot of murder trials?
No, it's just an analysis. Yes.
FHA loan, I don't know the.
Oh, we don't hear about that. You know, how to get your mom, hard lender, FHA, whatever you need to do. Now, we do get some lenders asking us for proof of the exchange, so they'll call our office and say, hey, can you send over the exchange documents so that we at least know they're doing it?
You wouldn't be able to do an FHA in a 1031. FHA is only for a primary residence.
Cool, thank you.
Oh, yeah, that's true. Yeah, there you go.
Thank you.
What if
See an agent.
what if you own multifamily, but you live in one of the units? Is it?
That's a good question. That's a very good question. So if you have 4 units and you live in one of them, you can exchange the other, if you sell the building, 75% of the building can be exchanged. Yeah, so all the units that you're not living in.
The FHA might come into play if you have a property that you had an FHA loan and you convert it to a rental property. So it doesn't, yeah, so as long as you're not buying, the purchase doesn't involve an FHA. But if it's the sell property has FHA, it's not.
Right.
You mentioned get a CPA, just make sure your CPA knows something about real estate. There's a lot of good CPAs who have no clue what this is.
They do. I get calls, the client says, can you tell me this, and this? And I say, talk to your CPA. They say, my CPA told me to call you. And I'm like, okay, you need to find a new CPA. But yeah, 1031 exchanges are great. I have some cards up here if anybody wants some on your way out. Thank you so much for allowing me to do your presentation. And if you have a transaction that you just want to talk out or see if, you know, there's some loopholes or see if it works for 1031 exchange, please don't hesitate to give me a call. Or email me.